Good afternoon and welcome to the Shield Therapeutics PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Greg Madison, CEO. Good afternoon to you, sir.
Great. Thank you, everybody, and thanks for taking the time to join us here this morning here in the U.S. and afternoon over there in the U.K. So excited to talk to you. We've had a couple of big announcements here over the past 24 to 36 hours. I'm joined here by Dr. Jose Menoyo, our Chief Medical Officer. He and I are sitting here in Boston. Hans-Peter Rudolph, our Chief Financial Officer, also is joining, and he's currently in Switzerland, but will be over here in the U.S. with us next week. So we're excited for his arrival. And again, we're really thankful for you to take the time to listen and engage with us here in the presentation. And we're very excited about a couple of news releases that just went out over the past 24 hours. First, announcing our collaborative sales agreement with Viatris and a new commercial partnership there, which can really expand our commercial resources for Accrufer here in the U.S. And it has a number of different impacts on our business. We're very excited to work with a new partner there. We also announced just yesterday the completion of an $18.5 million equity raise in gross proceeds. So that layered on top of an extension of the debt deal and the upfront from Viatris, we're collectively have a new roughly $33.5 million in new capital to go after and really expand our presence here in the U.S. and make the most of this Accrufer opportunity. So we'll go through that in detail, but very excited to discuss this with you, and we feel very good about our current business and appropriately where we're going to be going in the future. So first and foremost, as noted, we signed a collaborative sales agreement with Viatris, and that was announced yesterday. We couldn't be more excited to work with this new commercial partner in Viatris, and collectively our mission here is to make Accrufer the oral iron of choice here in the United States. And I'm going to talk about the marketplace. It's important to remind everybody just how big this market is and what that opportunity looks like overall. And I think collectively, between us and our team over at Viatris, we're very excited. And importantly, there are millions of patients out there suffering from iron deficiency with or without anemia, and it's critical that they get the treatment they needed. Right? Iron deficiency is not something to belittle. Very severe symptoms associated with that. So I think collectively, our thinking is let's get as many patients as possible onto our product Accrufer that are in need of a treatment like that overall, and then everything kind of falls off that. Back in the day, somebody used to work for us and good medicine is good business. We think we've got a great medicine, a great opportunity, and with that comes nice results on the back end. And collectively, again, we're excited to work with a new partnership at Viatris to go after that. We'll talk more in detail what that looks like. So this collectively now expansion of commercial resources, between us and Viatris, for us specifically more at Shield, what that does for us overall. Number one, I think this validates the oral iron market and our opportunity with Accrufer. I'm going to talk a little bit more about that in detail, but the work the team here has been doing at Shield with our small commercial team, a relatively small footprint to really establish this market overall. I think we've established a very solid foundation, and we are very much looking forward to accelerating that. So between us and our partner, this also has the benefit to increase that Accrufer awareness and adoption. And obviously with that comes increase in revenues. For us as Shield, this also allows us to decrease the time it would take to reach positive cash flow. And importantly, it also decreases our overall capital needs. And we certainly evaluated a couple different pathways here. There's certainly a pathway where we looked at, can we do this by ourselves and do this alone, right? And the answer to that is yes. However, it takes a lot of time, a lot of resources, and things like that. And in this current market environment, it's just it would be a more difficult and challenging path and require an extensive amount of capital to get us there overall. So the agreement that we've signed here, certainly checks a lot of boxes for us, but allows us to do it with a really strong, partner that has a lot of resources that we can be able to tap into collectively. But importantly, it accelerates revenues, decreases time to cash flow, and obviously is a much more efficient use of capital with the way that we've structured this deal across the board. So again, for us here at Shield, we think this is a very good deal across the board. The other thing to add into this as well is it's not just the resources and the collective resources we can bring to bear as both organizations here, but the team there. I just can't tell you how motivated they are about the opportunity. They went out and did extensive amount of market research on the oral iron market. They talked to physicians here in the US about the market, the treatment paradigm, what the OTCs look like overall, and really spent a good amount of time to understand the marketplace. And their collective view is very aligned with ours, that this is a market that is absolutely ripe for innovation here, ripe for somebody to come in. It's a very promotion sensitive market, and they believe we can help. So they spent a lot of time there, which really helps validate, I think, the work that we've been doing here at Shield alone. So really, what does this pathway to drive Accrufer growth look like in collaboration with our new partner here overall? So I think folks understand Viatris is a large global organization, 37,000 employees across the globe here, very well established infrastructure here in the US, which is excellent across the board. We've signed this agreement with them overall. And as part of the agreement, the way this works, so we'll receive a $5 million upfront upon signing. We have eligibility to achieve sales milestones totaling about $30 million based on achievement of net revenues. And this is a revenue and cost sharing model, right? So what I mean by that is, we'll share net revenues. Shield will retain a slightly higher percentage of the net revenues overall. And then we also will share marketing costs, right? And Shield will contribute a slightly higher percentage of the overall marketing costs as we go out there and promote Accrufer. So the beauty of this structure overall, and there's a number of different ways you can structure these deals, but the way this is, the beauty of this is both organizations are very much aligned on, let's get awareness driven for Accrufer. Let's get as many patients as possible, on the medicine that need it. We're going to drive net revenues with that. We both benefit from growing those net revenues. We're also going to be very thoughtful about the cost structure that goes with that, right? How do we deploy the costs that are appropriate to drive those net revenues? Let's share collectively where those costs go, how much it is, but also where that assets are deployed. So very much looking at this as you would expect across both companies of running this business and being a careful thought process on that. We've had very nice results with our small 30-person sales team in 2022. We'll talk about that in just a few minutes here. But this solid foundation of prescription growth really now can get accelerated. So we're going to go from a 30-person contract sales team, trying to get out there in front of physicians and talk about Accrufer, to now collectively a 100-person combined sales team, 50 from the Shield organization, 50 from Viatris, which is the ability to call on over 12,000 healthcare professionals. And we're going to focus exclusively on women's health and primary care, which drives the bulk of the oral iron market. 80% of the prescriptions come out of those two specialties. And just for clarity, when I say women's health, that's OBGYNs as well as nurse practitioners and physician assistants here in the US that specialize in that area. So, this dramatic expansion of commercial resources, on the field sales side is significant. And we'll talk about, some other opportunities here as well. So with all that, we expect that your revenue generation can accelerate significantly. We're targeting $150 million by year-end 2025. And then for Shield as an organization, that allows us to get to be a cash flow positive by the end of 2024. So in addition to the announcement on the Viatris side, which we'll talk a little bit more about in detail, we also have been very busy on the fundraising side. Collectively, as noted earlier, we've now got an additional $33.5 million to work with here, made up of the $5 million upfront payment from Viatris, the $10 million extension of the convertible debt deal with our largest shareholder, AOP, and then we announced just yesterday, $18.5 million in gross proceeds in equity overall. That bears, obviously requires shareholder approval, which will come up here in a couple of weeks, but we're really, really pleased, especially in this type of market, with the results that we have. We had very strong support on the equity side with our existing shareholders, but we're also able to attract a lot of really new and important investors into the story here as well. They just looked at where Shield is, what we've done, and what that future can look like. So we're really, really pleased with the results, particularly, again, in a very difficult market environment, to have that kind of support from our both existing and new investors. So a really, really good start for us. This bears in mind repeating, right? And at the risk of sounding like a broken record, but every time I get on the phone with you, I want to talk about this market. I think this is the view, something that we've had from the beginning, and well, we're putting words in our partners' mouth. I think this is the view that they have as well, based on their market research, that you've got a very, very large market here. You've got 20 million patients suffering from anemia. There are over 13 million prescriptions written every single year for oral iron here in the US. And all of that is OTC iron, right? It's all this over-the-counter iron, ferrous-based products overall, and there's a plethora of choices out there. So there's a lot of prescriptions, and you total all up, this is a $2.3 billion market, right? This is not a small market. So the nice thing is, we know where these prescriptions are coming from. As noted before, 80% get written by women's health and general practitioners overall. And you dive into this, and we talked about this before, it's an incredibly unsatisfied market, right? These poor patients that are just suffering from extreme fatigue, mental confusion, exhaustion, they just can't even do normal everyday tasks. They're just cycling around these OTC irons, looking for the right one that is going to deliver what they need, right? And these OTCs are plagued with poor efficacy, a lot of GI-related adverse events, a lot of discontinuation rates, and physicians are super frustrated, and the patients are too. Lastly, there's been little to no innovation in this market over the past decade, right? So Accrufer is the first and only FDA-approved oral iron to treat iron deficiency with or without anemia, regardless of the etiology, right? So you've got a wide open market here. Now, the challenge that comes with that, this is the work that we've been doing, is you got to kind of wake the market up. It's a dormant market in many regards, meaning that physicians have been so beaten down by poor expectations of oral irons that they kind of lump all those irons together in a class. It's the first line therapy. 90% of prescriptions here in the US are written for oral iron first overall, but their expectation level is really, really low. It's kind of what physicians refer to it as the hope and pray strategy, meaning that they're going to write an oral iron. They hope and pray that, number one, the patient can tolerate it. Number two, they actually can get the iron stores up to where it needs to be. And number three, they actually stand up long enough to get the success overall. So it's a frustrating market overall for sure, but we can wake it up, right? Meaning that we need to educate physicians that you should expect more from an oral iron, but you better have a product that can deliver that promise as well. So waking up this market, that's the work we've been doing. A lot of that is just driving awareness, understanding, and getting that first, prescription initiated as well. So now, as a small 30-person team growing to over 100 with other resources, this is what really excites, I think, all of us across the organization. I know that you better have a product that deliver on that promise, that you should expect more from an oral iron to treat these patients. We deliver on that promise, right? In our clinical trials, with our unique formulation, the mechanism of action we have that is just very, very different than these ferrous-based compounds, where we do not dissociate in the stomach and have free iron circulating in the gut, causing all these GI-related distress and adverse events. Our product stays intact all the way down to the site where it actually gets absorbed overall, right? So that allows us to use a low dose of iron, but be very, very effective on the efficacy side. And then importantly, do it in such a way that it's just well tolerated. In the clinical studies, as you see, adverse reactions less than 5%, discontinuation rates less than 5%. So when we get the opportunity to actually get in front of a physician and have this discussion, right? Meaning, tell me about your work with previous oral irons, what's your experience, and you get that deep sigh and just an eye roll of like, all right, let me tell you all the stuff that's wrong, and then we understand and show them, well, here's Accrufer, here's how it works, here's why it's different, here's the clinical results. You get that leaning in aspect, right? There's interest, and they want to prescribe, right? So this is a very, very promotionally sensitive product, right? The more physicians we can reach, either with representatives or other means, and the more often we can see them, has a huge impact on our ability to drive not just awareness, but adoption and prescription growth as well. All of that is noted. Very, very big market. $2.3 billion market opportunity there. Limited competition, but the challenge is obviously we need to wake that market up for sure. So let's talk a little bit about what we as Shield have done alone in 2022, and talk about some of our achievements here, and then we can talk about how that's now going to get leveraged with the new collaboration agreement we just signed. So we're very pleased. These are numbers all the way through the third quarter 2022. We've generated a total of just under 16,000 total prescriptions. We've had a nice increase in first-time prescribers of Accrufer, with over 1,600 new first-time prescribers of Accrufer. As noted, women's health continues to be a very big area for us. 50% of our prescriptions coming out of the women's health specialty. So whether or not it's women with just heavy menstrual bleeding, pregnancy, iron deficiency associated with uterine fibroids, there's 1 in 5 women here in the U.S. that suffer from iron deficiency. So that continues to be a very big market segment for us to go after. We established payer coverage early last year. We've maintained that level of 100 million lives across commercial Medicaid organizations right now. And all told, we generated a total of $2.4 million in net revenues for the first 3 quarters in 2022. So very pleased with the achievements. This chart, obviously is something that you always like to see, right? It talks about these are dispensed prescriptions here in the U.S. from physicians to patients overall, starting from our launch in July of 2021, when nobody in the U.S. had ever heard of Accrufer, right? We've talked about that before, where for a variety of reasons, Shield didn't do any of the pre-market development, but we came in and launched, and there was zero awareness. No one had ever heard of Accrufer. So from that small beginning to where we stand now, and we fully expect in the fourth quarter, we'll come in a range of 9,000 to 10,000 prescriptions overall. Very, very nice quarterly growth. And to emphasize again, this is being done with a 30-person contract sales team. In the fourth quarter, as we were working on this deal, we actually had 22 reps in the field, right? So we had a much smaller footprint out there overall, but they've done a really, really nice job. And we have a nice opportunity to build upon this as well. And as noted, you see half of those prescriptions come from women's health. On the payer access side, we established payer access just about this time last year, late December last year, as we signed our first commercial agreements. Overall, we got to about 40% of eligible lives, about 100 million altogether in about April or May timeframe. We've kind of helped maintain that level throughout this year. We continue to kind of pull that through from a prescription level. And this is one of those areas, in addition to the expanded commercial presence on the field sales side that we're talking about, we're very much in sync with our partner Viatris in terms of how do we expand this payer access overall? Is there opportunities? And they get some nice resources that we can tap into that we'll talk about in just a second. And last but not least, you've got a team here in the U.S. that knows how to execute and is so eager to get going with this partnership. I can't even describe it overall. As noted earlier, when I joined as CEO, I inherited a small commercial team the previous CEO had hired. Within the first 6 months, I've kind of moved all of them out and replaced them with really high, capable, and super, super motivated people here. All these folks joined us in 2022, with Christy joining us in just May of this year. I will tell you that even ahead of this deal, the commercial teams on both sides, both Viatris and Shield, have been working very hard behind the scenes so that we hit the ground running, right? So we've got a lot of work that's already been done right now. We've got territories mapped out. We've got all the alignments done. We've got the recruiters hired. They're starting to recruit literally right now as we speak. There's been a lot of work on the data side and how we view the whole piece. We've got training programs already lined up. So the team has been very, very hard at work with the Viatris team again, so that nobody's waiting for the pen to officially be signed. We're going to hit the ground running on this. And I think both teams are really, really motivated. So I think we've been really clear with all that we've done as Shield. As happy as I am to really go after that $2.3 billion market, we had to scale our business, right? Just doing it with 22 or 30 people, whatever you want to call it, in the field. We've had limited resources to deploy on the marketing side. We're happy with the results so far, but man, there's just so much more we can and should do. And I think collectively, this is what excites us overall, that beyond a shadow of a doubt, we've established, you'll call it proof of concept, solid foundation, whatever you may be, and we can build off this, and it's exactly what we intend to do. So the 3 key areas we identified as the big levers in order to really accelerate this and make this the product we all believe it could be is field force expansion, amplifying up our digital strategy and our marketing initiatives, and expanding market access on the distribution side. And as we'll go through this here, Viatris certainly checks a lot of the boxes here potentially for us. So this is a slide to try to depict it in a little bit more granularity of where we are today as Shield, what the Shield and Viatris organization could look like collectively overall, and some potential benefits that can come as a result of this overall that we go forward. This is really important to spend a few minutes here. So Shield today, as noted, we're a 30-person contract sales organization, 3,500 physicians out there in the field, and with that comes a lot of uncovered areas here in the U.S., right, or white spaces it's referred to. So we have a lot of areas that are not being covered. And secondly, their territories are huge, right? These are big geographic areas. You got reps driving 4 or 5 hours across their territory to try to see their physicians overall. So on a Shield and Viatris perspective, as noted, we're now bringing 100 representatives overall, 50 from the Shield organization, 50 from the Viatris organization. One important note here, we as Shield, we're going to hire this now as a Shield field force, right? So we're moving away from the contract sales model. Early last year in January, I hired a new VP of sales, 3 new regional sales directors, and we hired them as Shield versus the contract model that was here when I got here. That has paid immense benefits. So to bring the field force into Shield as Shield employees who will be, equity holders, aligned completely on the strategy. Again, one of those intangibles, but it pays off importantly here as well. So, both of us will have, our own sales forces out there. Importantly, that 100-person sales force now, we have the capability to call in over 12,000 targeted healthcare professionals in the US, which is great. But also importantly, number one, there's much less uncovered area in the US, right? So we're going to be able to reach more doctors. But really, really important for this particular product, the geographies get much, much, much smaller, right? So the benefit here, this is a exponential benefit versus, kind of a scaling benefit, if you will. And what I mean by that is, I noted earlier, this is a very, very promotionally sensitive product, right? So the more physicians you can reach and the more often or more frequently you can get in front of them, particularly with our field force, that pays off immensely overall, right? This is a reach and frequency model if there ever was one because of the promotion sensitivity. So the ability for our reps now, we can get out there in front of more physicians, but to see them on a much more frequent basis, we fully believe that will have a very, very important impact on the acceleration and the launch here as well. Going down the list here, we have the capabilities internally, meaning the people, to deploy the right marketing strategy, especially on the digital marketing side and the direct-to-patient side, but we've been very limited on the resources that we can actually tap into overall. Viatris, that's one of their core strengths is on the marketing side, very strong digital marketing capabilities, very strong direct-to-patient capabilities. They support very large billion-dollar brands exclusively on a non-personal way, meaning no salespeople go in there, all through digital marketing direct to patient. So, collectively, we're going to look at and say, okay, they have the resources available, then it's all right, how do we deploy those resources? So, I don't want to give the expectation that, next month you're going to see an Accrufer ad on TV. That's not what we're doing. We're both going to be very mindful of where we deploy the capital, how do we deploy it, how do we scale this overall? But importantly, we don't necessarily have to build all that same capability here at Shield. We can kind of leverage that collectively across the board. So that has a very important impact for us, not just to support the current 100-person field sales team when they can't get in front of their doctors, but also expand much beyond the 12,000 that are out there as well. So very excited that we've been, Shield probably a little overly reliant on the ability of our reps to drive this awareness and haven't done a ton on the marketing side to support them, but that's certainly going to change. Equally important is presence at congresses and medical meetings. Again, we've had very limited presence there as a Shield organization, but we've already got a first commercial booth scheduled here at the largest women's healthcare conference here in the US, which is ACOG. That's taking place in May 2023. And we expand to between ourselves and our partner, figure out how we have attendance at those congresses overall. But I noted earlier, women's health is just a very big area for us, ripe for additional growth there. So again, expanded presence at some of the medical congresses has obvious benefits as well. And then last but not least, on the payer side, we talked about the importance of payer access and how that can really drive overall prescription growth and net revenues. We at Shield, we had a small contract market access team that we deployed. I'd say they did a good job, right? They got some initial contracts established. We have 100 million covered lives overall. But I think between collectively us and Viatris, again, this is one of their core areas. They have a number of different people out there in the field, talking to payers every day, talking with Medicaid organizations. So I think collectively between the two organizations, we're going to figure out the right way that, how do we expand access, importantly, so that when a prescription is written, a patient can get on the medicine, and that brings net revenues into us as well. So there's a nice opportunity there. And similar on the distribution side, right? Just, they have extensive networks and relationships there as well. So we're going to explore different ways. And if there's an opportunity that, can benefit us as Shield and ultimately benefit our patients, we'll certainly look to go ahead and do that as well. Let me turn this at this point over to Hans-Peter Rudolph. Hans-Peter, if you want to walk through maybe a little bit of how we plan to scale, but importantly, how all this kind of starts to translates into estimated market shares and what we can do from a revenue side.
Yes, thank you, Greg. First of all, let's talk about market share. I think this is one of the key drivers, obviously, for us to reach the potential for Accrufer adoption going forward. On the right-hand side of this slide, you do have our estimated market shares for the next 3 years, starting with fiscal 23 and going all the way to fiscal 25. Market share, just for information, the way it's calculated here is the number of prescriptions we plan to sell for each of the forthcoming years divided by the total oral iron market, which we said was $13.4 million, 13.4 million prescriptions in 2021. Important to understand when you look at fiscal 23 numbers specifically, obviously, we're not going to be starting with this commercial partnership and have 100-person sales teams out in the field on January 1. So there's going to be a certain ramp up here, which is built into the market share estimate for fiscal 23. And to explain that a little bit more, you may want to turn to the left side of the slide. Obviously, both teams have a current sales force that they're going through interviews right now, making sure they're also the right people to continue to drive and sell Accrufer in the marketplace. And the sales team will be coming on board effective January. In parallel to that, there's going to be a lot of recruitment going on. So everybody in both sides is going to have to recruit additional salespeople to get to the targeted 50 reps or 100 on a combined basis. And then there's going to be onboarding, training, recruitment for all these people, which is all going to happen on a staggered basis. But all in all, we look to have fully ramped up to a 100-person sales team sometime toward the end of April 2023. And that's built into the model here, the market share expectation that you have on the right-hand side. It's also important to understand when you look at market shares, number two, that how achievable are these market shares, these underlying prescription sales that we have modeled here. And if you look at our Q4 estimates that we have laid out there, we're looking to sell probably somewhere in the range of 9,000 to 10,000 prescriptions in Q4 of 22. Currently, even though we have a 30-person contracted sales force, we're a little below that number. We've obviously stopped to backfill some of the levers here along the way. So we're currently probably averaging around 22 for Q4, 22 reps. If you look at that number of estimated prescriptions for Q4 and look at the 22 reps, that gives you an average prescription volume of 450 prescriptions per rep. You multiply that for a full year, you get to 1,800. And assuming you would have a full 100-person sales team, you get to 180,000 per year, 180,000 prescriptions. So if you look at these market shares here, just where does the 180,000 match in comparison to that? The number behind the 1.1% market share is probably somewhere in the range of 140 to 150,000 prescriptions, taking into account the ramp up that I just explained before. But then in fiscal 25, we're looking at the range of 550 to 600,000 prescriptions. That's a multiplier of probably 3.2 of the current average performance by rep. We feel within a 2-3 year time period that we're looking at, and some of the benefits that we hope to get from a partnership with our commercial partner here, we certainly believe those are very achievable numbers. And obviously, last but not least, you also should be considering the growth rates that we've already achieved, not alone in the past. So whereas we don't expect the same growth rate going forward, and certainly we believe a multiplier of 3.2 is very achievable within the next few years. Next slide, please. A little bit more background to the underlying model and assumptions here. As I just alluded to, we're looking to achieve between 550 and 600,000 prescriptions during fiscal 2025 with the full complement of a 100-person sales team. That would net a U.S. net product revenue of about $150,000, just above that. And it's important to understand that from an accounting reporting perspective, we're looking at a principal agent model. What that means that Shield, as the asset owner on a continued basis, will take credit for the full 100% of the net product revenue, meaning we will record all of the net product revenue achieved by the full 100-person sales team. We then pay the net revenue share to our commercial partner out of cost of sales, which effectively is going to reduce our gross profit margin going forward to 50% approximately. But keep in mind, as we have already reported in previous events like this is a high profitability margin product, meaning that without a commercial partnership, the gross profit margin would be 90%, which is substantially higher percentage basis. But keep in mind, with the additional ramp up in prescription sales and revenue on a net basis in terms of numbers, the gross profit due to Shield is still going to be bigger. Last but not least, also point in terms of annual expenses and debt service, particularly debt service. What I'll point out here is specifically the $10 million extension to the existing shareholder loan that we have from our partner AOP is going to be interest-free all of fiscal 23. So that's a substantial benefit to us, and it's certainly going to help us to preserve cash going forward. Next slide. And perhaps back to Greg.
Sure. So thank you, Hans-Peter, for walking through that as well. And so we've emphasized the opportunity here with Accrufer, right? Like we've been very clear from the beginning about what this large market can be, this real unmet need that exists out there. Our FDA-approved product, Accrufer, provides a really elegant solution here to a significant issue for these patients. You've got not just an experienced team here on the Shield side that can really execute on this, and we've been doing a very nice job of that. But I think now you layer on top of that this collaborative sales agreement that we just signed with Viatris, and the motivation and the expertise they can bring to help us along this journey. This obviously ties directly into the significant revenue potential in a market there. It's just looking for an optimal product here in Accrufer and the work that we have that. As a reminder, our IP runs all the way through 2035. So we are very, very excited. I can tell you, as noted earlier, that the commercial teams have been working kind of behind the scenes ahead of the announcement here on this deal to get ourselves ready. And what stands out is, I think, we know the capabilities on our team and the motivation, and I think we see a very, very similar, capability and motivation on our partner side. We couldn't be more pleased with the work that we've done thus far, and the more opportunity we have to work together on a consistent basis. I think we're more and more impressed with, the team there, the people there, but also their vision of what this product can be. And both teams are excited, as noted in the very beginning, to get as many patients on this medicine as possible, right? At the end of the day, it's about the patients, what they need overall, and that is our collective mission. And we're excited to take advantage of that opportunity. So I think for Shield, as we exit 22 with a really great partner on board, as well as fresh new capital to deploy as well, we feel, I think, for many of us here that we are in a very, very good position overall. There's been a lot of work to get us to this point for sure. And that continued work to drive awareness to the market, get this product out there as much as possible. I think we're in a very, very good spot there, and really looking forward to see how things progress in 23 and beyond as well. So let's stop there, and I think we'll start trying to field some of the questions that come through here. So bear with us as we kind of cycle through these as well.
Greg,
Yep.
Greg, Jose, Hans-Peter, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we received a large number of questions throughout today's presentation, but if I could just ask you to read out those questions and give response to it appropriate to do so, I'll pick up from you at the end.
That would be great. Okay, so one question, and thank you for the submitting of all the questions. We've got, there's a lot of questions, which is really great. So just to set expectations, there's no way we're going to get through all these, but I really appreciate everybody taking the initiative to get that as well. One question came in terms of the equity raise, in terms of director and management participation. Yeah, so great question there, and I can assure you that you had extensive participation. Like 5 of our 6 directors came into 4 out of 5 of our directors. They had extensive participation on the management team as well. So rest assured that both the board as well as the management team, we're all in, right, in terms of where we stand and where we believe in this, and we put our money behind that as well. So we're excited to participate. There's a couple questions in here just around overall how things run in terms of between us and our commercial partner, who has, ultimate responsibility versus not, and, how territories get deployed, et cetera. Just let me try to give a little bit of color and context of how we've set this agreement up. So, we're going to run this business together, right? I think it's the best way to do it, right? And through our discussions overall, we share a very common view of the overall market. Like other agreements that you may have, you'll have a joint steering committee, made up of, people from the Shield organization, as well as, the Viatris organization. And collectively, we're going to align on, overall forecasts, budgets on a yearly basis so that everybody's accountable for the same goal, right? We know what our goal is on the revenue side. We know what the spend allocates is. And then on a regular basis, we're going to monitor, the key performance indicators as you would if we were running the business by ourselves, right? And we're going to make sure that we hold each other accountable in terms of how we're doing towards those KPIs, how our revenue is projecting here, how our cost structure looks like overall. And just like, any other business, the ability to, if you see something that's really working well and we can add more, cost to that and take away from somewhere else, we'll deploy the cost appropriately. Save for, if things aren't going well, that's okay, what do we need to do to rejigger here? And, if we need to adjust the cost structure based on what we see, we'll do that as well. So it's very much the way that the business overall will get run across the board. We have 100 independent sales territories out in the field, right? So 50 of them will be occupied by Shield employees, 50 of them will be occupied by, Viatris employees, but collectively, we're going to have the same strategy, same actions, same KPIs that we're focused on. So as much as possible, without running into, any, legal issues, et cetera, we want to approach this as almost one collective 100-person team. What's really important here to understand as well is that 100% of the time and attention is to Accrufer, right? So for Shield employees, there is no other product in the bag. For the Viatris employees currently, there is no other product in the bag either. So 100% of that 100-person sales team's focus is on Accrufer, okay? And that's a very, very important piece for us overall. So I think structurally, we feel really, really good about the team we're working with, the alignment overall, and how we're going to operate the business on a go-forward basis as well. Let's see. And Hans Peter, as you scroll through these while I'm talking, if there's another one that you have here you want to jump in on, feel free.
Yeah, that was actually one related to payer coverage and specifically on whether we're still confident to get to an eventual 50% payer coverage, and whether the sort of like the lack of new payer coverage over the last few months is an indication that maybe there is resistance to the price point. And maybe just a word to that on how payer coverage works in the US, and then maybe I can answer that question hopefully satisfactorily. Sure. But in the US, the payer market is the commercial payer market is pretty much driven by 4 large PBMs, and we've successfully negotiated discounts with 3 of the 4 already. And when I say negotiated discounts, that's how the process works. You basically approach them and need to negotiate a proper discount off your list price with them. Ideally, you have a certain discount in mind. You sometimes get that and sometimes you don't. In one particular instance, we didn't quite get what we were hoping for. And whereas we could probably get payer coverage with that 4th large PBM tomorrow, it would not be at a satisfactory price. And so it's all a matter of getting penetration in the market, getting the demands generated, and then revisit that commercial payer again to see if potentially you could do better the next time around. So it's a matter of time. And if you do see certain time lags of when payer coverage has not significantly changed, then that's not a result of a resistance to the price point per se. It's more a matter of getting the awareness to help yourself in the negotiation process. So we're still very confident that down the road, we do get to a much improved payer coverage, and we certainly look to increase the 40% of the total patient market that we have currently in terms of insured market.
Yeah, it's just to echo that comment there. So much of that is you need to generate demand, right? You generate demand, you get yourself in a better position to have a reasonable discussion with payers. I think as Hans Peter alluded to, we first start with payers overall, right? There are some requests, if you want to call it that, of certain rebate levels that we're just not going to do, right? We're going to run a business. We got to make sure we do it in a sequential manner. And this is just exactly the way that it works in the US. You got to be patient, you got to be smart, you got to be strategic of, how you deploy that. And again, this is a real, strength that our new commercial partner can help bring to the table here, both in terms of just extensive relationships. A lot of this is knowing who to get in front of and when and how to do it overall. And I think collectively we feel really confident that there's a nice opportunity here. Now, we have not factored really a lot of expanded market access or coverage into our 23 projections at all. But I think collectively between the two of us, we feel very good about the opportunity to expand that coverage overall. There's a question in the mix here, just while we're on this topic, around some of the IV irons and some of them going generic, and will that have an impact on pricing and things like that? It really won't, right? So on the IV iron side, it's a different patient population, right? To be clear, right? The patient population for IV iron is more the acute patient. You're going to get iron stores up really, really rapidly. For example, if someone's got surgery here in 3 weeks and they got a hemoglobin of 8.5, you're not going to go on Accrufer, right? That's not an Accrufer patient. They're going to go on IV iron, get that iron stores up very, very quickly here as well. So on the payer side and the cost side for IV iron, there's like 6 or 7 IV irons all fighting out for market share there overall, right? So that's a pretty competitively intense market, right? A lot of innovation there. They're going to fight those out. The payers are going to play one of those off against each other. On the oral market, iron market side, if you kind of pivot, preferably to the left, the patient population is much, much bigger. They're classically not IV iron patients. Now, if somebody eventually doesn't get the treatment they need, their hemoglobins will decrease, and eventually they'll get on IV iron. But we're not sitting there from the payer side of worried about, because the last thing they want to do is send every patient to go get IV iron. That is super expensive. It's not that's the cost of the iron. It's an infusion suite. You're going to an infusion center, whether it be in a hematology clinic or hospital-based infusion center. So they don't want patients to be going in there, particularly in this environment right now. And patients don't want to be going in there either, right? No one wants to take time at work and get multiple infusions and go into a hematology clinic where you've got really sick and severe patients overall, to get their dose of IV iron. So we believe we've got a really elegant solution here. We're fully contracting where right now patients can try and fail on OTC iron before they get access to Accrufer. We're very confident in that ability there. So from a IV iron side and products going generic on that side, there's a high level of concern here. We're focused on what we need to execute. We think there's a big market there as well.
Yeah, maybe a couple other questions here, going toward the additional $10 million convertible loan from our shareholder AOP. And I could probably provide some additional explanations here just to put some clarity about this arrangement. First of all, it's not a new loan facility. It's actually an amendment to the previously existing loan facility that we agreed with AOP back in August of this year. You may recall AOP actually provided us a convertible shareholder loan for $10 million. $2.8 million of that was immediately converted to shares, leaving us a balance of $7.2 million of convertible debt on the balance sheet. AOP graciously agreed to extend and amend that convertible shareholder loan and then increase the balance by another $10 million. In addition to that, we made some changes and agreed some changes to the existing terms. Very important, as I already alluded to before, the $10 million of new funds is going to be interest-free for all of 2023. But then equally important for us is the repayment term has been extended from originally the end of December 2023 to the end of December 2026. So a 3-year extension, which is going to help us tremendously, obviously, as we go and achieve cash flow positive, obviously, over the next 18 months or so. So we feel that this is obviously a very fair type of terms that we received here. We've looked at other loan opportunities as well in parallel, compared them with other loan offers, and we felt these are more than fair terms. We're tremendously grateful to AOP to continue supporting Shield in many different ways. And quite frankly, obviously, would have not been able to get that kind of funding secured that we did now without the help of these important shareholders of us.
Good. All right, I'm going to paraphrase a question that came in here around, we talked about the market and the opportunity and, the unrest with physicians and patients about the product overall. And there's a question in paraphrasing here, of course, that, why can't the product just sell itself, right? It just feels like you got a great product, why do you spend capital and deploy resources here, can't the product just sell itself? And I'm going to kind of flip that on its head. It's a bit of a question here where in the pharmaceutical world, there is no such thing as a product that sells itself, right? You could have the greatest product in the world, but if nobody knows about it, then it ain't going to sell, right? And in very simple terms, that's what needs to happen, right? If, remember, we launched in the US, not one physician and not one patient in the US knew about Accrufer. Nobody, right? So you could have the best product in the world, best, it doesn't matter what industry you're in. If they don't know about it, they're not going to use it, right? So that's, in a very simplistic term, it takes resources to drive awareness. Like, it just doesn't happen, overnight. You need to, get in front of physicians, you need to make them aware of the product. You can do that through personal promotion, non-personal promotions we talked about from the marketing side, but you need to establish, like anything else, they're in the habit of writing product X for a number of years. You got to break that habit, right? So collectively now, like, we've done a really nice job at Shield in terms of taking that awareness level from 0 to where it is today. And you can see that as people become aware, they will write prescriptions, but man, like, we're still scratching the surface. By no way, shape, or form are the majority of physicians even aware of Accrufer at that point. Physicians we've been calling on are gaining awareness, but there's a whole bunch more out there. So I think collectively, between now 100-person sales force that dramatically expands the number of physicians that we can touch with a field team, plus now you layer on the marketing capabilities between us and our new partner on the digital side, opportunities to direct to patient, attendance at medical congresses. That's the beauty. This is how it all kind of fits together. And there is a cascade effect, right? Once you get awareness and start driving that, you will start to get a better word of mouth. But we're at such a small point right now, you got to kind of get that flame really kind of generated up there. And believe me, we are looking collectively at physician focus is first to make sure that they understand what the product is. But there's a nice opportunity, we believe, in the direct-to-patient side here as well, maybe particularly in like the women's health segment overall. But again, that's something that we're going to layer on at the appropriate time here. So, fortunately or unfortunately, this is the world of pharmaceutical selling in the US, especially in a market like this. You got to put an upfront investment to kind of get that payoff on the back end. We feel really, really good about the opportunity here, particularly with what we've seen over the course of the 18 months with our team and the limited resources. We feel really like that opportunity sitting right there.
Yeah, I've also seen a couple of questions, asking and wanting us to reaffirm that we have sufficient cash to get us to cash flow positive. And I'd like to answer this question as follows. Obviously, we do have estimates, company estimates, which we looked at very carefully and developed based on current understanding and what we believe is the most likely course of action going forward. But the only thing that we really know for sure is that the actuals will be different than estimates. That's just by default. That's how it's going to be. We believe that our estimates are quite conservative, and we believe, in fact, that with the money that we were able to secure now through these different sources, the upfront from the commercial agreement here, the shareholder loan, and the equity raise, plus the open offer, which is still forthcoming, we believe that we have sufficient cash to get us to cash flow positive. That's again under the caveat, obviously, that nothing unforeseen is going to happen going forward and that we can execute as planned. But right now, that's our best estimate, and we firmly believe that it is quite possible, yes.
Absolutely. And then one last question here as we're ready to wrap up. There's a question here just in terms of like the ramp up and the scaling and things like that. Let me just take a minute to reemphasize that. I think Hans-Peter covered it, but I'm going to just make sure it's explicitly clear. So, we signed this agreement overall, right? We as Shield, we have 22 contract reps that work for IQVIA right now. We're already in the process of interviewing those 22, right, to see who we want to bring on board as our own field force in Shield. And bear in mind here, we're very happy with a lot of their performance, but number one, we want to make sure that we get the right talent into the organization here, and we want A-level talent, right? This is a great opportunity. This will not be a challenge to necessarily recruit because particularly on the backing of a nice partnership with this, an FDA-approved product, there's already certain things established. So we've de-risked this in a number of different ways, particularly if you're a rep in the field looking at, hey, what's a fast-growing organization and where can I come in and make an impact? So We want the best talent in the industry right now in terms of our frontline managers and our reps. So we're going to interview our contract team. We'll decide quickly here who we want to bring on board. We'll have offers out to them before the end of the year. And, not to speak for the partnership on the Viatris side, but they're doing a similar type of work there as well, with their existing team to determine, all right, who's the best team to kind of bring forward. So we'll have a certain level of representatives collectively out in the field, starting in January. We're going to train the Viatris team in the January timeframe. And then onboarding and recruiting is key for the first quarter, right? So we've already got the recruiter identified. They're going to start reaching out to prospective candidates, literally they already have. We got the territories mapped out. So as we go through the first quarter, it's a heavy recruiting, onboarding, training, right, to get to that point where by the end of April, we expect that we'll be at that 100-person sales force collectively out in the field and starting to call positions. So, obviously, as we go through the first quarter here, a lot of work that's going to get done. I think we both feel very good about the possibility to attract the right level of talent here. Again, in our industry, there's been a lot of challenges over the course of the last year, right? So we've got a great product, a great market. It's FDA approved. It's already got payer coverage. There's a lot of boxes checked that we can really take on forth here and accelerate. So I think that's important just to think through as we sequence this, that we'll have the 100-person team out there, really call it in the May timeframe is when they'll actually be at that full force ready to go. So again, we're very, very excited about that opportunity. And with that, I just have this vision of the 100 team out there calling on these 12,000 positions and just very, very excited and opportunistic about where we expect it to go.
Greg, Jose, Hans, Peter, I think you've addressed those questions you can from investors. And of course, the company will review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Greg, could I just ask you for a few closing comments?
Yeah, and thank you. And I appreciate everybody's time and questions. We'll try to get back to it with as many answers as we possibly can as well. But look, a big couple of days here for us, right? So as noted, we've been working really hard. I think we've established a really good foundation. We're super, super excited to work with our new commercial partner, Viatris, and just excited about what that future can bring, especially for patients out there suffering from iron deficiency anemia. But the ability to drive dramatically increased awareness behind this expanded commercial resources is absolutely critical for our success. Equally excited in a very, very challenging market conditions right now. I don't need to speak to everybody about just how hard on a macro level the pharma and biotech industry has been hit this year in terms of price and valuations, et cetera, but very, very excited that we've got the support of our existing shareholders, particularly AOP, as well as the ability to attract new investors into the story here. We feel really good and thankful about the capital we've raised to really go after this market opportunity. And I think we are very, very optimistic about where we're going to go here in 2023, 24, and beyond. So thank you, everybody, for taking your time and for the questions submitted, and look forward to keeping you updated along the way.
Greg, Jose, Hans, Peter, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Shield Therapeutics PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.